Tom George wants to know, is Andy ever concerned about your safety with what you expose at Comex and the LBMA?
I hope not. People have said that to me before. Yep. I try to be polite, respectful. Mm-hmm. I don't say anything factual if it's not factual. You know, I'm not crossing that line, I don't think. You know, I'm not.
I don't think you're saying anything that's not true that other people know that just might be.
I'd like to say a lot of things that I don't. I'll put it to you that way. There are things that I
know that you tell me that we don't talk about on air.
Yeah.
That we discuss. Absolutely.
But, you know, look, I spend 2-3 hours a day, every day, reading and researching. This information's out there and it's incredible sources. And then I fact check it after I flag it as being something that needs to be talked about. But that's a fair question. And that's why I try to be respectful and say that I am a patriot, that I love this country, that you know, the country's done more for me than I would have ever thought I would achieve. And it saddens me to see these kinds of things. But yeah, you like to hope. I mean, look, a lot of people think that's why Bart Chilton died after exposing J.P. Morgan of cancer, I guess, a week later on Chris Marcus's show. But who knows? Who knows?
Well, feeling on silver price by the end of the year. We were talking when we were on the ship. You turned to me and said, you know, silver's going to get hit. Option expirations tomorrow, which you said was today.
Well, it is.
Tomorrow's the last trading day, though.
I'm pretty sure it's something else tomorrow. Today was the last day, I think. I think it has to do with contracts going off the board.
It's either today or tomorrow, but I thought that tomorrow was the last trading day of the front month. But whatever the case may be, either way, and Andy certainly has opened my eyes to it. Generally speaking, in the past, it's always been, and it really has followed suit, that towards the end of the month, towards option expiration, they will always try and hit it down.
And what did they do?
They brought it down.
Tomorrow goes back up.
And then early on in the month, up. And generally, at least I believe from where we are now, at a 14, 15-year high, teetering on that $40 level, which I think is instrumental. That once we get through 40, I personally believe, and it's not Andy's opinion, it's mine. I think once we get above 40, it is almost a straight shot to 50.
I'd agree, because if you look at the peak in 2011 and 1980, cumulatively, it spent about this much time above 40. It
only spent this much time really in the 30s.
Yeah, it raced up and raced down.
Correct.
And so you have a couple days worth of resistance, which is a whole lot of nothing. Talking about the gold-silver ratio, both Goldman Sachs and J.P. Morgan are forecasting 4,000 gold by next year.
Yep.
And
possibly by the end of this year even.
Right.
Goldman.
Well, yep. and let's put the gold-silver ratio at 50, which is higher than its average price of the past 150 years. That puts it at what?
70.
$80 an ounce.
75, yeah, around there.
80.
Yeah.
50 to 1.
Yeah.
50 times 80 is 4,000.
Yeah.
You put it at 70 to 1, which is way higher than it should be. It's where it was in 2021. You have a silver price of almost $60.
Yep.
And so that's a 50% gain nearly. So the point of it is silver, I believe, is the value of a generation. Now, you look at what's happened recently on LBMA. We've talked a lot about the T+8 week delivery debacle. We've talked about.
Have to put in, I mean, let's give them a break. I mean, there's
shortage of trucks, right? Well, but you have a blowout in the exchange for physical premium, where if I have a contract and you have bars and I don't want to go through the settling on the exchange, I'll trade with you. The last week, in 2 days, the premium for that exploded by 245%. Never seen that before. The lease rate in London, 8%. Never seen that before. The shares available for shorting for the last week and the week before that, Bob Coleman did a great write-up on that. 0. There's usually a few million shares. 0. You couldn't find anywhere. So all of these, plus the massive deliveries, these are all signs of great stress in the market. High borrowing costs, huge blow up in the spread between exchange for physicals, no shares to borrow, long delivery delays.
What was the latest that you told me? It was that at 37, they put on 440 million ounces.
440 million ounces they shorted at at 37.50.
Right.
And so where are we at today? I bet you we're
38.35.
Yeah, right about there. So, you know, they're only down a couple hundred million.
Well, when we were away,
they were down
about
$1
$1 billion.
Yeah.
Right. And I think that's what's going to happen again, probably tomorrow, the next day, once we start going ahead. Look, I said, and I think that this is more from a technical standpoint, but I think it would not surprise me to see silver trading close to that 50 to 70, but probably closer to the mean of 60 by year end. It's aggressive, but I think that once we get to these points that, you know, we've only been at 50 for a very, very short time, and it's been.
Do you remember what we talked about what UBS raised their forecast to for
UBS
silver?
was 42, if I'm not mistaken.
And then when did they say that? They said it could happen as soon as
when? December?
This
month?
September.
Yeah, September, right, which is right now.
Right, through June of 2026. But they're raising it from 38 to 42.
And Citibank just raised theirs to north of 40 also. So now all of a sudden these big banks are starting to get on board. You know, the silver train, and you know, some Citibank actually lowered their forecast on gold. They lowered it, and they increased their forecast on silver.
Well, and then and let's answer that question one more way. Comments from a guy named Bruce Ikemizu. I got that way wrong, but
So
Bruce is
not even. I mean, you can't even be further away from that.
How would you say it? Right here.
Ikemizu. I think that's the way it is.
Wow.
Yeah.
Okay.
That's it. I think that's it.
That's what I said. You just said it's faster. Ikemizu, like you tried to have a Japanese accent.
If you call him, I'm sure he's going to say that's my name.
This guy was the head of
Bruce.
Yeah, Bruce. Hey, Bruce. Was the head of Chinese ICBC Bank, which is one of their biggest banks, the head of their precious metals desk in Tokyo, and he now is the chairman, I believe, of the Japan Bullion Market Association. So I want to read you something that Bruce said. This guy's the head of the Japan Bullion Market. It's like the COMEX, right? But in Japan. The market may already be broken, he said. London appears to have virtually no physical platinum available for delivery. It seems that there really is no platinum in local London or Zurich yet continues trading nearly 3 million ounces per day of London promissory note cash contracts for immediate platinum ownership and delivery. Something is about to break. He talks about the nearly 30% interest to borrow the metal. It's never been that high. 30%.
You find that on that's what you would pay on internet stocks. Right.
And he says, making it reasonable to consider just buying it outright, he says. I cannot recall a time when lease rates rose this sharply. He says, behind the banks are the actual users who borrow from them. The JBM chief goes on citing mining companies, recyclers, jewelry manufacturers, and industrial users. The revelation of the frailty of the London Platinum, here's the part I want to get to. The revelation of the frailty of the London Platinum paper market can knock on to the other London metals such as silver that are also traded as levered cash contract promissory notes, thus lifting the veil on one of the biggest market frauds in history. Silver is now seeing a concurrent surge in its 1 month lease rate, as I said, to 7%. Never seen that before. And as we've talked about, they have a float right now of only 155 million ounces. That's less than a day's trading. They're trading upwards ends of 1.9 billion ounces per day of paper naked contracts. You're talking an existential threat to some of the biggest banks on the planet who are as stupid as a mud wall in a tornado or in a rainstorm. Stupid, because these other countries are standing for delivery. It's this close to ending. When you see it in platinum, when you see it in silver, you see it in gold, and you see it expanding across the globe. We are getting there. And the interesting thing is, you hear that? You hear nothing from the mainstream, not a damn word. You got to listen to two goofballs like us. I've been right on this, and I think ultimately silver and gold will go higher than anyone thinks possible, because this game's going to end. And it will end when the commercial banks get on the right side of it, which I think they will. In fact, one of the things that Bix Weir just said, he said it's different right now that the commercial banks have not shorted the rising market. And he said it was interesting at the Commitment of Traders report that just came out. Normally, as the price would go higher up to $39, you would see the commercials massively short. Now, that's what you never do if you're a good trader. You don't short a rising market. That's stupidity. You short a falling market and keep pushing it. Well, if you have a really deep pocket, like you're playing poker and you got 10 times the chips of everyone at the table, you can bully it around. That's what they, in essence, do. They sell the options. They let everyone get sucked in, like Kevin was saying, and then they smash it right before by shorting into a rising market. He said this time they didn't. And who was it? It wasn't the managed money, and it wasn't the commercial banks. Who was it? Well, this is the bullshit that is the COMEX. It was known as other traders.
Right.
Unidentified traders came in and shorted a few $100 million worth of silver on Wednesday and Thursday, driving the price down so that these options expire at or near worthless. Anyways, bottom line is we're seeing it in silver, we're seeing it in platinum. Follow the crumbs. And
gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.